that better? So thanks go to Tom Dean and Michael Berry, who was instrumental in convincing Tom to bring me here for this opportunity. I'm the mercenary geologist. I run a website, mercenarygeologist.com, and there's my email address. I generally try to respond to every email I get. Don't always get that done, but unless you berate me, you're probably going to get a response to anything you want to know. So I got to put out the disclaimer. I'm just a dumb field geologist. I'm not a certified financial analyst. So nothing I can say here today can be construed as a recommendation to buy or sell stock or short stock or long stock or whatever you try to do. Recognize that I come from a geology background and my strength is geology, business development, but I have been actively involved in the junior resource sector for the past 20 plus years. Whoop, wrong way. So what we're going to talk about today is the rare earth element commodity play. And it is very much like an area play. If you are involved in the junior resource sector, you know what's going on in the Yukon right now with gold discoveries, and the juniors, the Canadian juniors, flood into the area and make land grabs. Well, we've seen a very similar thing in the rare earth element space over the last couple of years. Luckily, I was one of the first people in this space. I first covered Avalon rare metals in June of 2007 and became actively involved in the junior resource REE plays at that time. This is pure speculation, folks. These companies have no underlying value at this time. So recognize we are not investing in rare earth element companies, we are speculating in them. So the gist of my talk is going to be how we separate the very few contenders in this space from the very many pretenders. And what the press release will not tell you is the title actually that Tom gave me, and I discovered that yesterday as I was putting my talk together, but really the press release does not tell you very much. It will move the market up or down, but it will not give you the underlying fundamentals of how to evaluate these companies. So the key evaluation criteria I use, and this does not simply apply to rare earth element space. This goes the gamut of any junior resource company. And bear in mind, with only a couple of exceptions right now, this is junior resource space. This is Canadian, these are Canadian listed stocks. But the key criteria, share structure, people, projects, and they have to be currently undervalued for me to be interested in speculating in them. So a lot of people tell you, well, or they don't quite understand, let's say, they are called the rare earth elements, but they're not all that rare. Here's a map of the world rare earth element deposits. You can find them on every continent. You can find them in abundance in certain places. They are rather unusual in the fact that the rocks that host them are relatively rare. The minerals themselves, although common in as rock-forming minerals, very seldom occur in concentrations enough to make economic deposits. The metals themselves are not particularly rare. So here are the current REE resources. Now, we all know that 95% of the world's REEs come from China. But if you look at the spread of resources, not reserves, but resources throughout the world, China is dominant, and that's basically Bayan Obo, the giant carbonatite in Inner Mongolia, where rare earths are produced as a byproduct of iron mining. This is not a primary rare earth element mine, it's an iron mine. Most of the world's current resources are in China. But we look there, and there's the United States at 13%. And most of that is currently at Molycorp, although we also have to count rare element resources in that. And then they're spread all over the world. Of interest is India. And India, although they only have, 3% of the total rare earth resources, they have been one of the longest lived producers through monazite beach sands. So when I'm evaluating companies, I said share structure, people, projects, but being a geologist, I evaluate the projects first, and I do that. There's 1,750 Canadian juniors. So my goal is, when I'm evaluating companies, is to eliminate as many as quickly as possible. Being a geologist, I go directly to the projects. I am very particular throughout junior resource space about the projects that I will possibly get behind. So in rare earth element space, I'm looking for a flagship project or perhaps a prospect generator. A prospect generator is a company that accumulates a bunch of projects and joint ventures those out to other companies to spend their money for a majority interest. It's a great model. The other thing I'm looking at is the distribution of the 16 rare earth elements. Some of them are highly valued, some of them are in great demand, some of them are scarce. So the things that we know that are going to be in shortage in the next, say, 5 to 10 years are things like neodymium and dysprosium and terbium and less so for elements such as cerium and lanthanum. And so the deposit type will tell you the potential metal content. There are two types of host rocks throughout the world. There are carbonatites, which are essentially carbonate magmas, and those host generally the light rare earth element deposits. Examples would be Bayanobo, Mountain Pass, Bear Lodge rare earth elements deposit in Wyoming. The other end of that are the alkalic intrusions, and they tend to be the ones that host the heavies. And the heavies, of course, are what getting most of the play now. And examples of that would be Thor Lake and Strange Lake, Steen's Camp Scrawl, which we just heard about, although it's a very small deposit. But the biggies in that space currently would be Thor Lake, Strange Lake, and Tasman Metals North Shar deposit. I am also very particular about location and geopolitical environment. There are companies in junior resource space that operate in countries of the world that are very unstable. Personally, I am not interested in those companies. There is enough risk in developing a mine anywhere in the world, let alone in a geopolitically unstable or corrupt country. And for that reason, I will stay away from them. And then also of importance is the time to development. There is a thought, and I don't necessarily subscribe to this thought, that there will only be 4 or 5 mines developed and then the supply will exceed demand. I have an opinion that build it, and I'm a baseball fan, so I'll use a baseball analogy, build it and they will come. If we have the supply, we will find uses for more of these metals. But time to development is very important. So here I mentioned Norra Shar in Sweden. This is Tasman's Metals property. And this is an example of a good project. Next thing is share structure. I'm very particular about the number of shares outstanding and fully diluted. There are companies that are very tightly held in this space. That's what I prefer. I have preferred this since I got involved in this business over 20 years ago, and that's the junior resource sector. So you want to evaluate the shares outstanding, the shares fully diluted. Make sure that's is not already dilutive to shareholders. So I have a rule of thumb. I want no more than 100 million shares outstanding and fully diluted for a company in a feasibility study. So when you see companies that are not in feasibility studies and they have multi-hundreds of millions of shares, personally that does not attract me. Companies that that are in advanced projects, I want to see something no more than 50 to 60 million shares outstanding, so you can make these companies work and you don't dilute current shareholders by low cost and many share financings. Then I look at the share price highs and lows, and I'll tell you in a minute why I do that. I want to look at the 52-week running high-low. I look at the 30-day, and I look at the daily. I'm no technical analysis guy. I'm a fundamental sort of guy. But I will tell you that I can see from those highs and lows and looking at a chart, you can certainly get an idea of where a company is going. And finally, in that instance, is liquidity. The bane of many junior resource companies is lack of liquidity. You can buy, but you got to have another buyer when you want to sell. So you want to look at very good liquidities. I consider a good liquidity when a junior will trade the entire share structure within a 1-year period. So if they have 50 million shares outstanding, I want them basically trading 1 million shares a week. So let's go on to share structure. How do we continue to value junior companies? Insiders, family and friends, what is called closely held stock. I always want that to at least be 10 or 20% of any junior issuer. So they have skin in the game. If they have skin in the game, then they control their own company's destiny, and they are shareholders like you, so they have a self-interest in getting the share price up. I always like to see institutions involved, especially for the more advanced plays. But I do not like to see one institution that owns 10 or 20% of a company, because what that does is then the institution, the shareholders, the management can be manipulated perhaps, or they have to act on the whims of an institution which may or may not have the remaining shareholders' best interest in mind. And finally, the public stock float. Well, that's where we get liquidity. So I very much want 50% of the stock to be in what I would call the retail investors' hands. That generates your liquidity. So you want to look at the distribution of shares. You also need, in junior resource sector, look at the warrants and options, especially the warrants. Warrants outstanding, if they're in the money or barely out of the money, and with near-term expiry dates, will tend to put a cap on the stock for a period of time. So those are considerations you need to look at. And then going on, working capital, you want to make sure they have at least a year's worth of capital in hand, and the ability demonstrated ability in the past to raise money at ever-increasing prices. Within that, you want to look at their burn rate, G&A, and exploration. That'll tell you how long before they have to go to the market again, because all these companies basically finance through very seldom, until they get to production decisions, debt. They finance through equity financings. Long-term debt's generally not a consideration in the junior resource sector, but short-term debt can be. You want to look at their financials and make sure they're paying their bills. If they have a bunch of short-term debt, that'll raise a red flag. And the gist of this stock are the red flags that you need to look at when are potential red flags. Recent financing, too, will tell you, and you can get this information at blendermedia.com. It comes out daily, Canadian Finance Bulletin. You want to look at proposed, amended, closed, and canceled. If they propose a private placement and it's amended or canceled, that tells you they have financing problems right away. So this is a company, this is Quest Rare Minerals, as Strange Lake deposit in Quebec. I was there in August of 2009. during a nor'easter. It's probably the worst August weather I've ever experienced anywhere on the planet. It's very remote, but it is a company which has a very good share structure with 58 million shares out. They are in pre-feasibility study right now. They got $50 million in the bank. Finally, let's go to people. You want to look at the management team, CEO, president, CFO, board of directors. I very much look for, in a junior resource company, a company run by geologists and engineers. This is exploration generally, and if it goes to a mining development, you want engineers on board. So we've seen in this boom of say starting in about 2003 when the junior resource sector boomed again, we increasingly saw geologists and engineers running companies. I'm a geologist. I have a vested interest. But I think that's a good deal. If a company's run by a bunch of lawyers and accountants and financiers, well, those people are necessary. But the real brains behind these companies, in my opinion, need to be geologists and engineers. And so we can go on down, technical team. This is the way a typical advanced junior is constructed. The advisory board will be experts, for instance, in rare earth element space. You need an expert in metallurgy and the processing. So those are the kind of people you'll see on the advisory board, and oftentimes financiers on the advisory board. So we need a cadre of people that support the management and the board of directors. So in junior resource space, the way you need to evaluate the people, you want to look at their educational and professional backgrounds. You want to look at their experience in junior resource space and whether they've been successful or they failed. Someone that's failed in 3 previous junior resource companies, I told a guy one time he'd bankrupted 3 companies, and I go, I don't consider a person who's bankrupt 3 companies to be an entrepreneur. And so we will see this time and time again in junior resource space where people that run the companies have run companies before, but those companies have failed. It's not uncommon for junior companies to fail. In fact, it is very common. You want to look at their compensation, make sure their compensation is within line of what's acceptable in the industry, and they will tend to hide their compensation, not with just salaries, that's public information, but read between the lines in their financial statements, and you'll see that they collect management fees, and they have options, and they have bonuses. You want to look at the entire compensation package. An average junior will pay its CEO somewhere on the order of plus or minus $200,000 a year. If they're paying a guy $500,000 a year, well, he better be performing and rewarding shareholders, in my opinion. And we also want to see technical expertise, and I alluded to this before, in the board of directors. In my opinion, now in the Canadian exchange, you generally have 5 people on the board of directors. 2 of those are independent. I want to see 1 lawyer, 1 financier, and a CFO or a corporate secretary, basically a bean counter. I want the rest of them to be technical guys because this is a technical business. The other thing that is the biggest no-no for me is repeated insider selling. As you probably, if you've read my stuff, you know I cover companies. And we have done phenomenally. Since I launched my sponsorship model about 2.5 years ago, I've covered 17 companies. 16 of those have doubled in 12 months or less. The one that hasn't doubled, they got 2 weeks to double. We think they have catalysts. Perhaps they will. So we've done phenomenally with our stock picks. In a bull market, do not ever confuse a bull market for brains, but we have done very well. So this is an example of good people. This is from the Bear Lodge Mountains. This is Rare Element Resources property. I was here very early on, you notice, in September of 2008. If memory serves, this was about a 40-cent stock at the time. It's been as high as $17.99. It's trading about $14.50 today. So we got in on this one very early on. But if you look at these people, this is it's who's who of the people I'm involved with. We've got a bunch of newsletter writers. You'll notice Bob Bishop there, Golden Homes, who runs the Gold Report, Bob Moriarty, who runs 321 Gold, Frank Quimby, Brian Fagan, yours truly, Jeff Phillips, who is an integral part of my team and a financier who we have done. The companies we've done in this space are Rare Element Resources, Quest Rare Metals at 22 cents, Tasman Metals at 10 cents. So we've been able to pick some of the high flyers with the right people, a core group of investors who are generally committed to the company and we'll stick by it. So evaluating junior resource companies, 50% fail on the flagship property, 25% fail on the share structure, another 15% will fail on management, and 5%, believe it or not, will fail on a crappy website presentation. So that means that 95% fail. The final test, are they undervalued with respect to their peers? Every junior will double in every running 52-week period. So the idea here is we buy low and we sell high. It's very dependent on the timing. And if you buy at low volumes and sell at high volumes, so you guys are as investors, speculators, this is nothing new. But that's the idea. So I follow a philosophy called the power of two. And that's basically the stock price has to double in 12 months or less. Every stock I cover, I am convinced will double in 12 months or less. When it doubles, we sell half. We take all our money off the table. We're playing with somebody else's money. We take that capital, redeploy that capital in another company that will double in 12 months or less. We also program sell our remaining position on the uptick. And we set what I call profit stops. They're not stop losses. You've taken your money off the table. If we go into a bear market, I have stops, profit stops set on the downtick. So we're continually trading. We're continually moving money around to basically take advantage of the fact that every junior resource company will double or more every 52 weeks. The REE commodity play, there are 200 plus companies. This is courtesy of Glenn Jones of Intera Resource Intelligence. 95% fail my key criteria. 10 companies pass. Then we consider whether they're undervalued. But out of this 200 plus companies, we will only have 4 to 5 new mines developed. So that's the success ratio. It's incumbent to pick the right companies. Risk include not only the normal junior resource risk, but metallurgical and chemical process is a fatal flaw for most of these companies. The distribution of the elements and the demand for any particular metal is also important. If you have a neodymium-rich deposit, then your chances of success are better. They have very high capex and very high operating costs. The real value are in the end products. And finally, probably the biggest the biggest risks are global economic conditions. These metals are generally used for discretionary items. If the world goes back to 2008, we will see a crash in this sector. We will see demand. Demand went down from 125,000 tons in 08 to 85,000 tons in 09 due to the global economic crisis. The cream of the crop, you know these companies. Molycorp has been the one that's moved this market. Other ones include Rare Element Resources, Avalon, Quest, and Tasman. These are the companies that will develop the first generation of mines. And look at the stock charts here. You can see led by Molycorp. So I wrote a couple of months ago. It's kind of like sounds like an 80s new wave band, Molycorp and the Minions. But you look at these stock charts, and you can see the way they've all followed Molycorp from its IPO in late July. You could have bought our Rare Element Resources for $1.96 in early July. It's been as high as $18. You could have bought Tasman Metals for 51 cents. It closed yesterday at $5.17, all-time high. You could have bought Quest Rare Minerals for $1.85. It's been as high as $6. Cream of the crop, I think this year you're looking at mergers and acquisitions and business combinations, strategic alliance and offtake contracts. So I very much expect this year in this space, or let's say within the next 2 years, that the cream of the crop will merge, acquire, do offtake contracts with Japanese end product users or North American end product users. So what I would encourage, and if you are not involved in what I call the cream of the crop, you've seen what you can do on the weakness of this thing. Rare Element Resources hit $18 about a month ago. It then dropped down to $11 again. So if you want to get involved with the best companies, buy them on weakness is what I would say. Then what we have then is, what's the next generation? Assuming this demand continues, we need to value share structure, people, projects, undervalue. We're looking at the next generation of mines. The cream of the crop are mines that will be developed from 2012 to 2016. Then looking out, further out, we're looking at the mines that will be developed in 2016 to 2021, unless somebody comes and does a merger and acquisition or a joint venture. They get out of the junior explorer model and they go and do something big. And I think you're going to hear about a company this afternoon and that perhaps is going to do that. So we're looking at, if you're going to shortcut this for the next generation, I'm talking the penny stocks here, and there are still good penny stocks out there. I think that's going to be the business model they have to employ. And there's the company right now. You'll hear from Don Lay later on, Medallion Resources, currently trading at 50 cents. I will tell you that all the companies I mentioned today, I am a shareholder of. I will tell you that three of these companies, Quest Rare Minerals, Tasman, and Medallion, sponsor my website, so I essentially get paid to cover these companies. But this is a very strong chart to me. They went to 75 cents. Last financing was at 30, and they've been going sideways now from 40 to 60 cents over the last couple of months. Remember this, 90% of these companies out there are simply mining the stock market. They have no intention of ever making a mine. I think the 5 companies I mentioned today all have intention, very good intention. They have the right quality of share structure, people, and projects. Mark Twain first said this: mine is a hole in the ground with a liar standing beside it. That was pertinent in 1865 in the Comstock Lode. It's pertinent today. You can find me. I write my newsletter. It's called Monday Morning Musings from Mickey the Mercenary Geologist. It's a free subscription service. All you got to do is go to my website and sign up. And you got to do your own due diligence and research. Remember, a day without learning is a day wasted. If you so desire, I will send you a template that I use to evaluate companies. That's free too. And good luck, investors. And I'm not always in monkey suit. Most people only see me up in a coat and tie now. But this is a place, Chris alluded earlier about, I made 4 outcrop discoveries from 2003. This is a beautiful place in the Tutagon of far northern BC. I spent a lot of time there. I caught a lot of fish. Now I'm a fisherman. I love to fish. And anyway, that's it. Thank you for your time. I don't know if we have time for questions or not. 5 minutes? We have 5 minutes for questions. So, I got rock and roll ears, and I stood around a drill bit for a number of years, so I'd appreciate if you use the mic.
Mickey, could I ask if you have looked at Eucor Uranium and the Bocan?
I have. I was at Eucor this summer. I do not cover Eucor. It has too many shares outstanding for my liking. The project, they need to get underground. They are at the limits of drilling this thing because of the attitude of it. It'll be very easy for them to go underground and do a test mine. There are very narrow veins. I mean, you're talking veins this wide. So I think what they're going to have to do is use, with a mining width, minimum mining width of a meter and a half, they're going to have to split shoot it. So they can drive a drift in the footwall very easily from sea level and drive with the entire, and then cross-cut into it for bulk samples, test raise up, and then develop stopes. It'll be at least some sort of shrink stoping minimum would be the best, but it's going to be a very high-cost mining operation. At this time, I'm not convinced it's going to be viable.
Next question.
I like it that you're getting into a lot of these, to-be companies. But when I look at the space, you said there's 1,700 juniors. I have to buy a portfolio of a number of them.
Yes.
How big should that portfolio be? Because I'm not going to be like you where, they're going to double in a year. I'm going to have some that are going to go out of business or be down to a tenth of a penny. So I'm just curious, is it 10 companies, 5 companies that, you can hit 1 or 2 and you still make money?
Yeah, that's a very good question. I'll tell you what I do. At any one time, I hold a minimum of 15 to 20 companies. That is, and there are another 15 to 20 that are on my radar screen. So I'll tell you right now, I hold 30 or 31 companies because I very much like junior resource space, and that's unusual. As soon as the markets start looking nervous again, I'll probably shed 10 of those very quickly. I have a core investment. I think you do not want to put all your eggs in one basket. For those that knew me 3 or 4 years ago, I was retained by Jay Taylor for 4 months to evaluate his portfolio. Jay covers 80 stocks. In my opinion, I could not personally do that. I wouldn't know 80 stocks. So you'll have to make up your own mind. But Jay told me a very smart thing. He goes, you never want to put more than 5% of your net assets in one stock. So that would equate to, you need to play 20. And I will not disagree with that at all. You want to spread the risk around because some of these companies are going to fail.
What's the ratio between railroad mineral investments and other mining companies,
that I have? Okay, I hold
Mickey,
5.
Can you repeat that? Sorry.
Yeah. The gentleman asked, what is the ratio of REE companies to other exploration companies? And I will emphasize these are not mining companies. They're really exploration companies. Very few of them have mine. Right now, I hold 5 rare earth element companies. You heard about them today. The only one in that space I don't hold is Molycorp, and I didn't get in soon enough. I missed Molycorp. So I hold 5 of 30. I hold gold stocks. I hold very much like the prospect generator model. I am covering 2 new prospect generators in the next couple of weeks. If you're a subscriber, you can figure out what they were because I gave an alert to my subscribers in early January. I'm very bullish in junior uranium space, and I cover a couple of companies. Uranium's the next big thing, folks. I've been saying it for over a year and a half now. It finally came to pass in July. In my opinion, I was on BNN. I'll be on Fox Business this afternoon, and we're going to talk about uranium as the next big thing.
Time for one more question. Anybody? All right, I think that's it. Thanks, Mickey.
Thanks for your time.